Okay, Luis, as we talk about this kind of iBuying, home flipping model, adding liquidity to the real estate market, you can see how it makes a lot of sense for buyers. But do you think Zillow is actually going to make money on this? You know, as we mentioned off the top, that this is a company that wasn't showing accounting profits in its core advertising business, and now you're moving into a significantly more capital-intensive business in that legacy offering. What are the financials looking like so far?
Yeah, so making money is kind of a funny term these days for growth stocks. Clearly, the trend isn't really for companies to be that focused on making money. And Zillow seems to be embodying that spirit of the latest trend of these tech companies. And and yeah, technically Zillow isn't showing a profit on an accounting basis for its advertising business, although it is cash flow positive, and that's definitely worth noting that it's self-financing. And they're definitely using that cash flow from the advertising business to help get this home buying business off the ground. So, the idea here is that as Zillow is ramping up this business, they're gonna really they're gonna really burn a lot of cash because they're gonna have to buy a bunch of houses before they sell them. And you know, so far it's proven to be just that. In the first half of 2019, Zillow lost over $116 million in terms of operating losses. And perhaps these operating losses are a bit overstated because the company really isn't operating at scale yet. And sure, there's plenty of startup costs and overhead costs that come with starting a new business and rolling out to all these new cities. Um, I think it's most helpful to focus in on the economics of the average home flipping transaction. And Zillow actually does a really good job of providing disclosures for that. So, according to Zillow, they in the second quarter of 2019, which is the most recent quarter, they sold 786 homes. And on average, it purchased a home for about $286,000. And on average, it sold a home for about $317,000. So right off the top, that's a $31,000 gain per home, which is about an 11% gain. Although it's worth noting that that 11% gain includes their 6 to 9% commission. But there, but there's additional costs in there, and Zillow basically discloses that on average for each home, it incurs about $29,000 in additional expenses to renovate each home and also to sell each home, and then another approximately $4,000 to $5,000 in interest expense that it incurred to borrow money to buy each home. So, if you add the interest expense to the selling costs, Zillow is actually burning a couple $1,000s for each home at the transaction level, and that is actually not accounting for any of the overhead costs, including pretty heavy costs for tech development and advertising. So basically, this Zillow offers business is a negative gross margin business as it is today, and then of course it's an even more negative operating margin business right now.
Yeah, I mean, when you have that, 29, so you have a $31,000 profit off the top, and then immediately $29,000 goes out the door, for refurbishing costs. You can see how it's really difficult when you have to take into account interest expense and marketing to make sure people know about this program and those sorts of things. It's kind of difficult to maintain profitability, but it's worth noting that this is very early days for the business. So, Luis, when it comes to the end game for this company, when Zillow reaches scale, what is kind of Zillow's plan to use this home buying business? How does that fit into the overall strategy Zillow has going forward?
Yeah, so clearly Zillow has a plan here, albeit it's a pretty ambitious and visionary one. The way I kind of have thought about it is there's a few different legs to the stool of profitability for Zillow offers, so to speak. The first one is Zillow believes that once they get Zillow offers business to scale that they can actually make a slight profit on the actual home flipping part of the equation. But really, um, it looks like the real money is actually going to be in building businesses outside of directly buying and selling the home. So Zillow wants to create this whole ecosystem of using its platform as a place to transact on homes, and then cross-selling other services to people. So obviously, the company already has you know advertising relationships with real estate agents, and if you're someone who's selling a home, you may then also on Zillow, you may also then use Zillow if you're going to go buy another home, and then therefore you may be inclined to use the premium agent product through Zillow. And more interestingly, though, perhaps, is that Zillow is actually getting into other businesses related to the transaction process. So last year, Zillow acquired a mortgage company, and they hope to attach mortgages to different transactions on their platform. And there's a whole host of other ancillary services that you could see them attaching, and they've also laid out in their filings that they're in. And these transactions include these services include everything from title insurance to escrow, moving services. And if you really start to think about it, these other businesses, including the mortgage business, are a lot more straightforward fee for service businesses that have a really straightforward cost structure. And it's really easy to see Zillow making a profit if it can bundle up a lot of these services in addition to flipping the home. So, I think this whole exercise is really more of an ecosystem play. And to the extent that Zillow can get scale in this product and build other services around buying and selling homes, it could actually work.